Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes confusing world of corporate filings. Today we're diving into a report from Expion360, and let me tell you, it's got more twists than a pretzel. We're going to look at a new bonus plan that could make or break their executive team's year. Expion360 filed what's called an 8K report. This is like a quick update companies give to investors about big changes happening, things that could be important for people to know about the business. In this case, it's all about how they're planning to pay their top executives. This report is dated April 9, 2025, so it's fairly recent. It outlines the details of a new incentive plan for the company's employees, especially the big bosses. The main event here is the approval of the 2025 Employee Incentive Plan. It's basically a roadmap for how the company's top dogs can earn extra money, cash bonuses, if they hit certain goals. Think of it like a game with rewards for winning. This 2025 plan is for the executive officers and employees. It allows for those extra cash payments, which they call cash bonuses for top executives like Brian Schaffner, who is the Chief Executive Officer, and Interim Chief Financial Officer Paul Schoen, the President, and Carson Hagen, the Chief Operating Officer. These cash bonuses are tied to reaching certain performance targets or goals selected by the company's compensation committee. These goals are supposed to help the company grow and be more valuable to its shareholders, people who own stock in the company. Okay, let's break down some of those specific goals. The first one involves sales targets. If the company hits $15 million in net sales for 2025, then the CEO, President, and Chief Operating Officer each get a bonus of 5% of their base salary. If they reach $20 million in sales, they get another 5% for a total of 15% if they nail all three targets. This is of their yearly salary, so if someone makes $100,000 a year, they could get an extra $15,000. Next up is financial reporting. The CEO, Brian Schaffner, gets a bonus of 10% of his salary if the company files its reports with the SEC on time and gets a clean audit report. This means that the auditors didn't find any major problems with the company's financial statements. Then there are operational efficiency projects. The Chief Operating Officer, Carson Hagen, gets a bonus for completing certain projects on time. These include things like installing new software for the sales and tech support teams in the first quarter, launching an app for customers in the second quarter, implementing project management software in the third quarter, and doing a security review in the fourth quarter. He gets 2.5% of his salary for each project completed on time, totaling 10% if he gets them all done. Another goal is product certification. The President, Paul Schoen, and Chief Operating Officer, Carson Hagen, get a bonus of 10% of their salaries if they achieve what is called UL certification. For home energy storage systems, this means that the products meet certain safety standards. Then there's a joint venture goal. The CEO, Brian Schaffner, and President Paul Schoen can each earn $100,000 for executing a definitive agreement. That's a final official contract, and another $100,000 for achieving initial funding objectives. The Chief Operating Officer, Carson Hagen, can earn $50,000 for these things. Finally, there is liquidity improvement. The CEO, President, and Chief Operating Officer can earn a bonus based on how much the company's stock price increases and how much cash they get from people exercising stock warrants. Warrants are basically options to buy stock at a certain price. The bonus is a small percentage of the cash the company gets when people use these warrants. The company will look at their audited financial statements, official financial records that have been checked by outside accountants at the end of 2025 to see if they met the net sales targets. The company also says that even if the executives hit all of their goals, they won't get paid their bonuses unless the company has enough cash in the bank. This is to make sure they have enough money to run the business and build up their inventory. The executives can also choose to receive restricted stock units, basically shares of stock that they can't sell right away instead of cash bonuses. And here is a little warning. The company says that these net sales targets are just for determining bonuses. They are not giving financial advice, and you shouldn't depend on these targets. They are not guaranteeing anything. Now let's step back and look at the bigger picture here. Expion360 is clearly trying to incentivize its executive team to grow the company's sales, improve its financial reporting, and launch new products and services. Tying bonuses to specific measurable goals makes sense. That being said, there are some risks involved. If the company doesn't have enough cash, the executives might not get paid their bonuses. Even if they hit all their targets, this could lead to dissatisfaction and potentially even cause them to leave the company. Also, relying too much on stock price increases could incentivize executives to focus on short-term gains instead of long-term growth. Overall, this bonus plan seems like a reasonable attempt to motivate the executive team, but investors should keep an eye on the company's cash flow and make sure that the goals are aligned with long-term value creation. Thanks for watching Corporate Decoder. If you found this analysis helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.